Good morning to all traders and welcome to another Markets in Waves video. Today is Monday, the 8th of March. Happy Women's Day to all women who watch us today, or for you, man, congratulations for the women that they are in your life. Today we're going to have a quick look. I'm going straight to it. Index, US index, euro dollar, NASDAQ, the US oil, and also Apple. So starting off with the US index, we are seeing this sort of correction, divergence actually playing out quite well. We've got an ABC. I'm expecting 1, 2, 3, 4, and 5. So I'm expecting another leg up because now we've broken the 92 handle. Okay, so I would expect the 38-point Fibonacci retracement to be the next level up to be reached, right? Because this is the wave 3 retracement, right? Once we get there, I'm expecting to see this decline, not only from a technical perspective, but also from a macro perspective as well. Okay, but I'm not going to talk about the macro perspective right now. Now, the other scenario, of course, as you well know, would be to continue a little bit higher and go up to the 106.18 extension. I wouldn't be surprised if that happened, technically speaking, but because this is the 50 Fibonacci cluster over here, okay, a 50 retracement and 161 Fibonacci extension, but I doubt it's going to be the case, okay? However, we can keep an eye on the 92.50 here, yeah? If that breaks, that means we're going to continue a little bit higher. Now, on euro dollar, I wouldn't say exactly opposite to the index here, but mainly the index moves, like 55% of the index is euro dollar. So you can expect also the euro dollar to decline a little bit further down. Now, last week we talked about potentially this moving up, but we also saw an alternative count, which is seeing this as a double three over here, right? Similarly to the index. Now, over here, guys, we broke the 78.6 Fibonacci extension of waves W and X. So I'm looking at the 118.40 next, okay? Because the 61.8 Fibonacci retracement of this move, right, looks like it's done now. So if that is a validated break, okay, by the end of the day, most likely we're going to 118.41, and if we break this, then the next level to look at is the 117.68, and for me that would be the lowest point that we'll be looking at this moment. Now, we are probably remaining bearish because there is no signals that indicate some sort of divergence, even on the MACD or on the RSI. We'll go on NASDAQ. We talked about this potential expanding flat over here, 1, 2, 3, 4, and 5, with the 61.8 Fibonacci extension of waves A and B having been completed now at 12.168. Okay, so with this done, I think this rejection here is going to be wave 1, and then we're going to get 3, 4, and 5 for ideally a fresh high and coming up actually to perhaps even meet the regression channel of this upside move, right? Now, we really need to pay attention though to what happens between this area over here, right? So between the 1273 and the 1216, this is going to be a very critical zone for me, okay? In case we break below, that means most likely that this is wave 5, and we're going to see 1, 2, 3, 4, wave 5. This is wave A instead. We're going to see a B, and then we're going to see a C, okay? So even if we break higher, guys, yeah, above, and we get back in the ascending channel, then I will be looking for a rejection at this level. But because we see no signals on the RSI or the MACD, okay, it's very possible that we're going to see something like this with perhaps a signal popping here, either a hidden divergence or a standard divergence on the RSI or the MACD. Now, quickly on the US oil, we talked about this opportunity the other day. I wasn't expecting it to extend too much, to be honest, but due to the break of the regression channel up here, this is 1, 2, yeah, I think this is 1, 2, 3, 4, and 5. That's going to be 3, 4, and 5. So this is one scenario, yeah. So I'll be looking at a fresh high, perhaps up to the 70, because since we did the third 300 Fibonacci extension here at 68.30, then the next level to look at will be probably just the psychological, the 70. Okay. The other scenario, however, is that, you know, because we've got 1, 2, 3, 4, and 5 over here, yeah. The other scenario is that this is wave 1, yeah. This is wave 2, this is 3, 4, and this is 5, which means that we're going to turn back lower and we're going to start correcting down in wave B, because in the medium term, I'm looking at this as an ABC correction, right? Now, if that happens, well, we should be looking at fresh highs, obviously, after the correction, but this is the medium and long term. Now, in the short term, I'll be honest, I do see another leg up, okay? I do see another leg up, but I think the 70 level is where we start correcting. If it's going to be for wave B, or if we're going to, you know, start seeing that actually correcting down in wave 4, and then we're going to see 5. If we look, of course, at the longer term, then this is something that we have to keep a close eye on, because if you recall, down from the lows, yeah, it's either that we've had a wave 3, we're going now for wave 4, and then we're going to get wave 5. So this wave 4 ABC is part of wave 4, or we ended the cycle, the bearish cycle, and this is an impulse on the upside. Okay, these two scenarios are both in play. And last, guys, Apple. Well, I see quite a few scenarios here as well. 3, 4, and 5 means we ended the upside and we're going to move down impulsively, which is, this is wave 1, 2, 3, 4, and 5. Then we're going to get A, B, and you know the rest. This is one scenario. The other scenario is that this is a, you know, 1, 2, 3, 4, and 5. This is an A, this is a B, and we're going to get a C. Okay, so wave 4 would be down here. If wave 4 comes down at 111.23, this means that we're going to have a running flat, because we're expecting another wave to the downside to complete a 5-wave impulse, right? Which is the last wave of an ABC flat pattern. Now, if that happened, then it means that, you know, after that we're going to move higher. But we could also get an expanded flat. If we get an expanded flat, guys, we're looking back down at the 82 level, okay, which is also going to be the level where we're going to consider this still as an impulse rather than a downside move, right? So I wouldn't be surprised if we see any of the three sort of scenarios coming into play, you know. But the most likely one, because I really do like how we respect this relationship for a flat, with that being an ABC over here, obviously, yeah. I like this 1, 2, 3, 4, and 5. Even ended, you know, it could have ended already, because we do so is the only actually one that we do see a hidden bearish divergence and a normal divergence, one coming after the other. So this is usually a very good signal for a continuation of the trend. I mean, on the medium term rather than the short term, right? So this will be all for the day, guys. I hope you enjoyed the video. If you have an alternative scenario in mind, please do not hesitate to make a comment on our YouTube channel, and I will get back to you as soon as I can. Thanks for watching, and we'll speak again tomorrow with yet another Markets and Waves video.